Michael, thanks for joining us again for our December quarterly investment update. The first two questions are sort of our standard stuff, looking back and then a bit of a look forward. So can you sort of talk to me about the performance of the fund from an investment perspective to the 6 months till December, and what were the impacts that drove that performance?
Yeah, sure, Sean. A lot happened during the 6 months, but when you look at the performance to the end of the year, it was pretty much in line with our long-term expectations. So what we saw during those 6 months was interest rates rise quite a bit, so particularly bond yields rose a lot, and then they fell again, and we saw equity markets really in sync with that, falling as interest rates rose and people were worried about more inflation and stronger for longer inflation, and then coming back to life as the market started factoring in a soft landing. Interest rates fell, bond yields fell, and markets had a strong December quarter. So when you factor those two in, you get reasonable returns across most options.
And looking ahead, so the 6 months up until 30 June, we've got ongoing conflict in the Middle East, the US economy, what's happening in the Australian economy. What do we expect for the next 6 months?
Well, it's very difficult to say. I mean, we last year thought maybe we'd have a recession. That didn't happen. Markets, economies have been strong over that 12-month period. We still think that there's risks around recession. Labour markets remain very tight. The market believes that there'll be a soft landing, but it does worry, and yes, data comes out, if inflation's a bit higher, it worries. If it's lower, they tend to perform more strongly. So that inflation story is still a very dominant story. What's been happening in the Middle East and in Ukraine has been much less important to the markets to date, but that could change if we get contagion really out of what's occurring, and in horrific circumstances in the Middle East, then we may well see markets react. We may see oil prices rise sharply, impacting inflation as well. So I don't know is the answer, but there's a number of different factors that could impact on markets. Inflation could continue to come down. That's what our indicators are saying, and we could see strong markets again for this half. We'll see.
And Michael, it seems to be the time of year where we see the league tables, and Chant West recently released a top 10 performing growth funds for 2023. Pleasingly, Vision Super's balanced growth option was number 2 in that, returning 11.7%, which was a great result, and I think talks to a little bit of what you spoke about in your first answer. But members quite often ask us why we're not number 1. So can you explain for members what we're looking to achieve when we invest their money?
Well, what we're looking to achieve is good risk-adjusted returns. And when I say that, what I mean is we have a view what's going to happen, and we know what markets are pricing in, and sometimes we have a strong conviction and sometimes we don't. And it's very difficult to know what's going to happen. So we will invest according to our conviction. If we take a strong position that could get us to number 1, but we turn out to be wrong, we could end up number 50, which we don't want. So we're trying to take positions relative to our skills and our conviction. And the reality is that's done pretty well the last decade. We have been number 1 at times, depending on the period, but not all the time. We would love to be number 1 all the time, but no fund is number 1 all the time, and some funds that have been number 1 for quite a period of time, they've found themselves at the wrong end of the league table for a sustained period.
Michael, not one that we prepared for, so this might catch you off guard. You spoke about bond yields.
Yes.
We do have a diversified bonds investment option. Any commentary on that option?
We've seen this half year, the December half, stabilisation in a way in bond yields. So they went up a lot and then they came down. They went up from sort of 4 to 5 and then they went back 5 to 4. So it's been a reasonable half. We still believe, barring some outlier some contagion, that we'll see bonds perform reasonably well here. Bond yields are no longer low. As inflation comes down, real yields go up. They've been up and down a bit, but in dollar terms, I think the outlook for bonds is better than it's been for some time. So again, circumstances could make a fool of me, but at this stage, we would say that the outlook for bonds is reasonable.
Michael, as always, thank you again. Members, please remember we've got the contact centre and advice team that can help you with any questions you may have. We'll be back again for the March quarterly update. Any questions between now and then, please give us a call. Thank you.
Thank you, Sean. Thank you, members.